Thanks for joining us once again. This is Greg for Teslafaninsight. Today's focus is on the fact that Enron Fear cost Tesla $200 billion in valuation. This is Greg for Teslafaninsight. Thanks once again for joining us. If this is your first time, welcome. If you're a repeat visitor, welcome back. We also want to thank our Patreon supporters. If you'd like some helpful tips and methods for understanding better how to trade and invest with Tesla, please join us on Patreon at our top tier. We actually provide a daily show sizing up the marketplace as we see it to assist you in your decision making. We also want to note that this is a copyrighted broadcast. Any rebroadcast of this without permission is prohibited. So I wanted to do a brief show today related to what's going to happen today on earnings, but in general, sort of giving us a way to assess what's going to happen today and what's going to happen over the next 2 weeks. So this whole show is kind of prompted. There was one of our viewers left a note on our show we did yesterday, and he pointed out that Wall Street does not understand Tesla, which is why it's not getting full valuation and some of the other problems we're seeing. So I wanted to make this, part of the problem with being on YouTube is that the goal is often to do similar stuff to what everybody else does, and you have everybody having the same conversation. It doesn't demonstrate expertise. So having worked in a number of places, including Franklin Templeton, Fisher Investments, Forbes Magazine, I've had a chance to sort of watch people who guide how money is managed and why, to understand what the thinking is behind it, hence how and why we do shows. And you notice we don't tend to do the same kind of stuff everybody else does, just because there's just a need for a different voice. And this brings up a very interesting point I was thinking about, which is, have you ever noticed when there's a presidential speaking engagement or something of that issue, all of the news stations are always airing the exact same thing? I just thought it was fascinating because one of the problems that's happening is that, let's say you were a news organization and you didn't cover that because everybody else was. Well, all of a sudden, you might miss out, right? People would just say, well, how could you not cover that? Well, the answer is we wanted to offer our viewers something different because every station was broadcasting the same stuff. So, and they're all taking the same news feed, and the only difference is what could people say after the conversation was over. So this little problem right here, if you will, is why the news organizations are losing and going out of business, particularly newspapers, because how do you differentiate your product so customers coming can get what they need, but at the same time, you can't stop doing what you're doing because it's what everybody else does. So this is a real pickle, and I want to bring this over to the whole investment management business. So what's going on is that to a large extent, when you look at the ratings by Moody's or Standard & Poor's, those ratings drive the value of the bonds and stocks. Well, to some extent, one of the things I've been talking about basically is the Elon discount. I believe Tesla gets a 20% discount on what the true value of the company is because of what happened with Enron, what happened with MCI, what happened perhaps with Madoff. With all these situations, everyone was told to say, hey, everything's fine. And then all of a sudden it wasn't, and a bunch of money was lost. And there are a lot of people whose jobs disappeared with that. So the question that you have to ask yourself is, let's say you're a portfolio manager, right, at one of the big funds, be it Fidelity or name any of the big ones. The minimum salary for the head of a decent sized portfolio is about $5 million a year. And then they add bonuses on that. That's like minimum. If you've been there a long time and other elements of it, that number could be 25 to 30 million dollars a year. So there are obviously a variety of funds that sit within an organization, but there's a fund, I want to call it big cap growth. So big capitalization growth is probably, let's call it 30% of the money being managed out there. So I wanted to kind of run this by you because what the money managers aren't thinking about, they aren't saying, oh, I could make a bunch of money here if I get in and sit comfortably with Tesla. What they're saying is, I want to optimize my risk premium. So, for example, Elon has a PR staff that he hired and is in place now for China, but there isn't a similar thing for the United States. Why? Well, we all know what the answer is. The answer is that Elon likes being professionally cheap. So it's great that he chooses to, hey, that's 100 grand a year times 30 to 50 people for all the materials, staffing, and interaction with the marketplace. Well, you know, that's about $2 million, right? Well, what is Elon doing instead of that $2 million? He's tweeting, right? What's the difference in cost? The tweet, in theory, costs almost nothing. It costs a lot because it takes a time for him to maintain that tweet process. But in essence, what he's doing is saying, hey, I only spend money on stuff that I feel like spending it on that's consistent with the core values of where I'm trying to take the business. So if I can incrementally recapture $2 to $5 million and reinvest those $2 million into, for example, the R&D facilities for Tesla sit right next to Stanford. If you look at the value of the real estate that they sit on, it's one of the highest office rents anywhere on the planet Earth, and definitely in the United States. And so what Elon is doing is saying, hey, me spending money on your PR needs could cost me on renting where I need to be to optimize how we're doing business. And that's worth a lot more to me than more transparency for that firm. So how is Wall Street reacting to that? Well, have you noticed that? So one of the fun things about Silicon Valley, there's something called the beautiful building phenomenon. And what that is that if you go and watch over the last 20 or 25 years, there are a lot of companies that get to what's called the beautiful building phase, where all of a sudden they have the headquarters, and instead of having a number of people that are spread through office buildings throughout Silicon Valley working for that company, they build something that can capture half of the corporate staff right there. Well, guess what happens typically? Right when they build that building or announce it or finish it is often one of the down points for many of those stocks. So what's Elon's response to this? Well, have you noticed that Elon doesn't own a home in Silicon Valley now because he sold all of his? Number one. Have you also noticed that you can tell where all the factories are, but you can't tell exactly where the headquarter building is? I mean, I know where it is. I've been there a couple of times, and then they kind of moved it next door. But the general point is there is no Taj Mahal where a CEO can walk up or a fund manager can walk up and go, man, look at how beautiful this building is. And it really is an illustration of how well this company is doing, how well organized it is. All its processes are hitting on every cylinder. Hence, we have this manifestation. In fact, the Wall Street Journal kind of made fun of because because they were pointing out that Elon and Tesla have some of the worst parking of any corporate headquarters on planet Earth. And I totally agree, and I've seen it. And when you go and experience it, you're like, if they can't figure out this parking lot, how can they figure out how to deliver a great car? Well, that's been a show we've done a couple of times to illustrate the point that Elon's game is, yes, he's a large shareholder, so he wants the company to make money, and he doesn't take a salary, But the other part of his game is, I want to say it, creatively cheap. So, one last sidebar I want to note on this is one of my biggest laughs, and I've been surveying Tesla employees about this, is that everyone has been talking about the Model 2, or if you will, the Model 1, that's going to come out, and and the fact that it's going to look like this or look like that. Well, guess what? If Tesla is willing to have Model S's that can run anywhere from 50,000 all the way to $150,000 a car, and the exterior looks exactly the same, what do you think he's going to do with the Model 2? The answer is there's going to be a very small battery pack in that thing, and it's going to be a Model 3 that's been sort of gutted. And the reason for that is that Elon is working on some engineering principles where what he's focused on is how can I reduce my engineering costs but get a pretty good product out the door. So if he drops the Model 2 and it's not the Model 3 body, there's paint adjustments, there's robot adjustments, there are all these other adjustments that go into that vehicle. And guess what? That's not Elon's style to waste a dollar if possible. So as a result, guess what, folks? Look at that Model 3 because you're looking at the Model 2. You could call it a Model 1 if you want, but take that Model 3 pack, cut it in half, and you now have that 25,000 car that's everybody's looking for because that's Elon's style. So I digress. Let's get back over to why it is that there's a $200 billion cost. Well, the reality is that there are all these analysts, and every company gets a grade of some sort. And the better your grade, the higher the value you get. So, for example, the disclosure process of a Microsoft, of a Google, of an Amazon, all of that stuff is almost a situation where the analysts on Wall Street would say, we want this number. And then, and we want this number consistently, and we're getting this number from the other large cap firms like you. And the response from those guys is, how many different ways would you, how many different ways will you want those numbers, and when would you like them, and we'll have them right over to you. And not only that, but Tesla doesn't do this, and Elon is even messing up this process by deciding not to be on the conference call. The analysts want access to the CEO. That way they can ask creative questions that allow them to further glean the information they need to get a certain comfort level with the underlying company. So basically, there's a bunch of information that Wall Street wants that Elon doesn't provide. Key of that, in my mind, would be, what's your backlog? He's not telling, right? And then even try to get into costs. There's a whole bunch of information he's unwilling to give up. And as a result, this is what I'm talking about, the Elon discount. Now, you guys are really smart, and what you figured out is that instead of him trying to hide something, he's just trying to deliver a product, a service, and services, and he continues to meet all the bogeys. So we actually did a show that you can go back to where I believe, what we basically said is that it's possible that Elon has a strip club that he's set up inside of the factory in Fremont, and therefore they have to watch out for that. Well, that's the issue, is that there have been a large number of things that have happened in past companies that are not happening here that they have to sort of anticipatorily budget for, and hence that's why Tesla's stock price is discounted. Why am I choosing to go through this today? Because what I thought was fun was this person was talking about, hey, they just don't understand Tesla and Elon and what's going on. And the answer is the opposite. There are a bunch of people practicing CYA. And when you give me every ounce of data that I need to make a decision on what's going on, and I can triangulate on that data from many different angles to have comfort with it, that's when I can give you full valuation. Until then, y'all aren't getting your full valuation, no way, no how. I bring all this up today because after today, we have a new block of information that will go with the factory's opening, etc. Like, when is the factory opening? And other bits of information like, hey, we just showed you a video 2 shows ago of going to Tesla facilities. And, we'd love it if you guys could start, maybe send photos to our Facebook account or to the email address provided to give us pictures of the service facility that's near you. Because guess what happens? Our viewers can watch that, look at those lots, see the dearth of vehicles, and know, hey, these guys are seriously in a backlog situation in terms of having cars to sell. And this is one of the elements of data that people are using. I famously am fascinated. There was something that happened that was in business that I think is amazing. Very, very small point, but very amazing. What happened is that one of Warren Buffett's companies builds double-hulled rail cars. And so one of the underlying values of this company, I think, as he was buying it, is that there are a number of oil-producing regions that don't have pipelines yet. And pipelines can be hard to get set up because of the environmental concerns. Well, they had a backlog of as long as 3 years for these train cars because they're required for oil to move in that in case something bad happens. You have 2 hulls or 2 exteriors to use. Well, he bought the company. Everything was going great. The backlog maintained. It was terrific. And then all of a sudden, a pipeline was approved to help bring, I think it's from South Dakota, oil either to Houston or someplace else that allow, I think it's actually to Baltimore, to allow it to not have the train cars. And it turns out that it's $17 a gallon to move by a train car. It's like $3 a gallon to move by pipeline. And so all of a sudden their backlog just got blown up. So I point this out because even when people have all the right information, the investment thesis that they had for that company could be destroyed, further illustrating the point with if Warren Buffett can get jammed, so can a lot of investors relative to Elon having a crazy moment and something wrong happening at Tesla. So the answer that I'm wanting to provide today is, oh yes, Wall Street completely gets Tesla, but all the people that are all feet in have already been spoken for. And then you have these holdouts on the capital preservation side we talked about that are saying, oh, we understand Tesla, but we ain't got no documents to support the argument they're underlying the long-term value of this company. And until you guys provide us with those documents that we're requesting, like, what is your backlog, right? Well, let's do transparency on your costs. There are all these commonly provided data points that Elon is not providing. And so the more of this information you do not provide, the more your stock price is discounted. So I think it's amazing to watch. We talked about Michael Berry in our last show in terms of him getting slammed. But part of what's happening there is that you can spin a narrative of something bad happening at Tesla, but then he keeps delivering the numbers that support great fundamental operations. So again, I believe what happens today is we get some good numbers, but we also get a bolstering of a block of information that people can use to more comfortably invest in the company. And once that happens, I think we end up with nice value increase, but I believe it'll take a little bit, a few days, maybe a couple of weeks, for all of that information to be truly massaged so that we can see the outcome of the excellent job that Elon's doing and the company is doing. So, if you're a smart person and you view our channel, just remember, yeah, Wall Street totally gets Tesla. And the challenge is that there are people that make millions making a decision what to do or not do with that fund's money. And unless you provide a certain block of information that's bulletproof, you get a discount. And and that's where we're at now. So will Elon modify this? I don't think so. That's not his style. But as we see those factories running and those cars coming out and those customers happily driving them, all those new metrics and ways to quantify what's going on with Tesla, they can definitely get their arms around, get comfortable with it. And I think that's what ends up happening based on information we get today with earnings. At any rate, I look forward to your comments on this. This is Greg for Teslafaninsight. Please note we do have some SpaceX shares. If there's interest, just drop us an email if you would at the address below. Would greatly appreciate support on PayPal or Patreon to support the channel. And please take time to like and subscribe. This is a copyrighted broadcast. In German, we say Tschüss, au revoir. French, Lehitro, Hebrew, Choda Hafez, Farsi, Stars, we say Russian, Ni Hao Mao, Chinese, Konbanwa, Japanese, Hey Do, our friends in Sweden, G'day, our friends in Australia, Namaste, our friend in Hindi, in India. And in Jamaica, we say enough respect, walk good. Thanks for joining us. Have a great day, and bye for now.